In today's video, we're diving deep into SoFi Stock, a company that has been making significant waves on Wall Street. Hello everyone, welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. 2024 has been a pivotal year for SoFi, demonstrating its ability to generate consistent profitability and achieving 4 consecutive quarters of GAAP PE profitability. Beyond this, SoFi's loan platform business has seen unprecedented growth, reporting $40 million in bottom-line profits for Q3. This success has been amplified by a $2 billion forward flow agreement with Fortress, positioning the company for what could be a transformative 2025. Wall Street analysts seem to be underestimating SoFi's potential. Let's break it down. In Q3, SoFi delivered 5 cents in EPS, which translates to an annual run rate of 20 cents. If this performance continues, and we believe it will, the company is poised to exceed expectations. Wall Street currently projects SoFi to achieve $24 in EPS for 2025, a modest 4% increase over the current annualized run rate. However, this forecast doesn't account for the full impact of SoFi's growing business segments, strategic partnerships, and operational efficiencies. Looking forward to 2025, we're entering an era of significant EPS expansion. If SoFi continues to outperform, the stock's valuation will undergo a dramatic shift. Consider this. At a current share price of $17, doubling to $34 in 2025 would still leave the stock undervalued compared to its future growth potential. This is why we view the current price as a buying opportunity for long-term investors. To put things in perspective, let's revisit the numbers. SoFi's Q3 performance alone sets a baseline of 20 cents EPS for a full year. Analysts' expectations of 24-cent EPS in 2025 suggest minimal growth, which seems disconnected from SoFi's demonstrated momentum. If we extrapolate from Q3's performance and factor in sequential growth, a more realistic estimate could push annual EPS beyond 30 cents, potentially approaching 40 cents. This adjustment paints a much brighter picture for the stock's valuation and underscores why Wall Street may be significantly underestimating SoFi. SoFi's growth trajectory isn't just about numbers, it's also about strategy. The company's inclusion in the S&P 500, which seems increasingly likely as its financial metrics stabilize, will attract substantial institutional inflows. With greater visibility and a broader investor base, SoFi's stock could see sustained upward momentum. Additionally, the continued success of its Galileo platform, alongside other fintech initiatives, underscores its ability to diversify revenue streams and enhance profitability. The valuation metrics for SoFi further highlight its potential. Currently, the stock trades at a PE ratio of 134x, reflecting its early-stage growth dynamics. However, as EPS expands, this ratio will compress, making the stock more attractive even if the price doubles. For instance, if SoFi hits 30 EPS in 2025, a $34 share price would reflect a PE of 130x, a notable improvement from today's levels. And in a bullish scenario where EPS reaches 40 cents, the PE would drop to 85x at the same share price. This compression underscores how growth will drive long-term value creation. The company's strategic moves also support its growth narrative. The $2 billion forward flow agreement with Fortress isn't just a one-off win. It's a signal of SoFi's ability to secure large-scale, high-impact deals. Additionally, the integration of AWS and other fintech partnerships is beginning to bear fruit, further enhancing its operational efficiencies and bottom-line performance. These developments are not yet fully reflected in Wall Street's forecasts, creating a compelling opportunity for forward-looking investors. Now let's talk scenarios. In a bear case scenario, SoFi's EPS could reach 30 cents in 2025, driven by incremental gains each quarter. This projection assumes 0.6 EPS in Q1, 7 Q2, 0.8 in Q3, and 0.9 in Q4. At $34 per share, the PE would settle around 113x, which is still a marked improvement from today. On the flip side, the bull case scenario projects EPS of 40 cents, with quarterly contributions of 0.8 in Q1, 9 in Q2, 11 in Q3, and 12 in Q4. At $34 per share, the PE would compress to 85x, showcasing the stock's growing affordability relative to earnings. Beyond 2025, SoFi's trajectory could accelerate even further. By 2026, EPS could range between 55 and 80 cents, depending on the pace of growth across its business segments. Such performance would position the stock for additional appreciation, potentially reaching $68 or more per share. While these projections may seem ambitious, they're grounded in SoFi's demonstrated ability to innovate, scale, and capture market share. The upcoming quarter will be pivotal. Analysts expect Q4 EPS to come in at 4 cents, but based on recent trends, there's a strong case for another beat, potentially reaching 5 cents or 0.6. This would solidify SoFi's full-year EPS at 14 cents, well ahead of Wall Street's 12 cents consensus. Such an outcome would further validate the company's trajectory and set the stage for continued growth in 2025. Investors should also watch for near-term catalysts. The possibility of a major partnership announcement or additional large-scale deals could provide immediate upside. With rate cuts on the horizon and a strong consolidation base around $15 to $16, SoFi is well positioned for a potential Santa Claus rally to close out the year. Short-term price targets range from $18 to $22, offering additional opportunities for gains ahead of 2025. In conclusion, SoFi is entering a transformative phase. Its combination of consistent profitability, strategic partnerships, and innovative growth strategies makes it a standout in the fintech space. While Wall Street's forecasts remain conservative, the underlying fundamentals suggest a much brighter future. Whether you're a long-term investor or a short-term trader, SoFi offers a compelling mix of growth and value. As always, do your due diligence, but this could be the moment to capitalize on an undervalued gem. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.